This is our Forex blog for October 6, 2011. And like most days, we really want to trade the strongest currencies versus a week. And we would prefer to trade currencies that are, strong on all time frames. We have the dollar and the yen on top, which most people trade against the bottom pairs. And we have the real-time bar-by-bar strength or weakness, which is made up of 5 different statistical tools. 3 of them measure the direction that the dollar is moving, up or down, versus all the rest. One of them measures the intermediate time frame intensity of that direction, up and down. And the last one measures the bar-by-bar statistical intensity. And so when those all align, you have plus 80 strength, especially plus or minus 100 strength or weakness like it too. This is a trend that's very likely to continue. Now, unfortunately, underneath there we have the intermediate time frame trends down, the daily trends down, but the weekly and monthly trends still up. Trends change, first on the fastest time frame, let's just say a 1 minute time frame, and then the 2 minute time frame switches from up to down, and then the 3, then the 5, and so forth. So, this could just be a few day pullback in a very strong longer term weekly and monthly uptrend, or it could be the beginning of a new downtrend. You never know what the future will hold. But you do see in real time that the dollar is extremely weak here at 2, the daily trend's down, and then you don't know if it's going to continue to downtrend. A lot of times, because the weekly and monthly trend's up, you'll see strength come back in here. So you can see, one second, you're right, you don't see it. So you can see at 2:30 here, not much strength return. So it's very safe to assume that that incredible, intense downtrend is going to continue. And it does, a little around 3. So, coming up to 3 and slightly after, we're looking for a currency that's strong. The pound just had incredible weakness, so it wouldn't be smart to assume that. But the Australian, was quite strong before that and was also strong yesterday. Stronger than the Australian. Now, its weekly and monthly trend are down. So anytime you trade in currencies where one of them has an uptrend but the real-time trend's down, the other one has an uptrend where the longer term frame trend's down, you got to be really careful. But usually these trends will continue for 30 minutes to a few hours. So here's the Australian dollar. You can see, first of all, it's above the hourly. The IntelliTrend candle bars are green. And we also have 2 narrow range patterns here, which are very high probability. Our IntelliStop here is long. And notice how it kept you long all the way to here at the end of the move. Huge profit, and you can see that even if you missed the first breakout of this narrow range pattern, which this is where you would have got in, went up to a Fibonacci area, pulled back, couldn't break the previous day's high. Resistance areas, as you can see, it stalled there. Once broken, tend to become support, and it just took off. And even if you missed the first wave up, you could catch the second wave up, and you can see it went up about 60 pips. The euro was, for the most part, weak the majority of the day. Monthly trends just slightly up, the weekly trends down. Really, the only super strong currency was the Australian until about 5 o'clock here. The yen was quite strong, and its weekly and monthly trend are up. So that when you see real-time strength come in like this at or above the 80 level, you don't know if that trend's going to continue, but when you see only 1 bar of weakness here and then a little bit of strength, it's pretty much safe to assume when the longer-term trend's up that strength will come back, and at 7 it does. At 7, the euro was relatively weak. Looking for a sell in a weak euro and strong yen right before 7 was a smart thing to do. And you can see by looking at the chart, it just broke from above to underneath the hourly. That's usually a pattern for likely down moves. And you have this little sideways rectangle pattern right here. You draw your fibs off that first wave. And your profit targets, 20, 30 pips down. You have the previous week's low right there, which is a good profit target at 95. You're likely to make 30 to 35 pips while risking less than 10. And, that's a very high probability trade. And you can see our IntelliStop got you out right here. When moves happen, these IntelliStops really fast, and, very often it gets you out right at the ideal peak time in a trade. This only works live. It uses a lot of our statistical tools, and when the market moves statistically too far, we yank the stop up because usually it reverses. So it allows you to catch, in many cases, 90-95% of trend moves. Pretty choppy day. You can see a little bit later the euro got some strength here, and again even more at 9. And also the weakness that was there before subsided again, and then you had some strength on one 5-minute bar, and then some strength again. The weekly trend's just slightly down, the monthly trend's just slightly up. It sure beats buying the Swiss, which is really weak on all time frames, or the New Zealand, which is definitely weak on all time frames too. So at 9, which currency was the weakest? Well, the dollar and the yen, which were weak earlier, are no longer weak. It really appears that the pound had the least, strength and the most weakness over the previous few hours. So you could have looked for, and it obviously in hindsight you can see it didn't really remain weak for that long. But looking at 9 o'clock would have been a good time to buy the strong euro versus the weak pound. Here's 9 o'clock, then the pullback. If you had bought this pullback even a little bit earlier, you would have got into a small trade or a break even. And you can see another pullback right after 9. It breaks out. You get into that trade, and you can see it shot up 50 pips. So when you use the currency meter and focus on the ones that are most likely to continue up, at that time the 9, this was strong. The dollar and the yen were also strong too. So you could have after 9 o'clock bought the pound dollar. I'm sorry, sold the pound dollar and also the pound yen. Now the pound dollar actually is way underneath the lower containment band. It's usually a risky idea to sell a currency when it's more than 20 or 30 pips underneath the lower band. Let's see if the pound yen had the same situation. That's why we have, this was a little bit better because it fell way underneath the band, retraced back up. If you had shorted this, you would have had a small loss right there because you can see in the future, after 9 o'clock, the pound did not stay extremely weak. And really, the yen lost its strength and had just mild strength versus all the other pairs, and the dollar actually went weak at 9:30, whereas the euro maintained its strength. So if you take a couple trades at the same time with smaller number of lots, you can catch the big wins like in the euro dollar, the euro pound going up, and that way you might have a break even in by selling the pound yen and a small loss in the pound dollar, but you had a huge win in the euro pound.